and welcome to Markets Today. I'm Surabhi Upadhyay. Let's start with the headlines. The market remains unruffled after RBI's policy. Key indices end yet another range-bound session with marginal gains. Mid-caps outperform. No Christmas goodies from Raghuram Rajan. The RBI holds base rates as expected. Says the bank is vigilant on inflation, but its stance remains accommodative. Speaking exclusively to CNBC TV 18, the governor adds that the 7th Pay Commission will have an impact on inflation dynamics. Not much festive cheer for the Indian auto industry. Maruti Suzuki, Eicher Motors and Ashok Leyland report sales below expectations. M&M bucks the trend. Bharti Airtel is the top Nifty loser after Credit Suisse gives it an underperformed rating and cuts the FY18 EPS by 6%. All right, those are the top headlines, and what we've had on the street is another range-bound session. Events are coming and going, but this market's range is not really breaking. We've already had the expiry. The next event, the RBI policy is over, and the market's now already looking out for the other big central bank. We're talking about perhaps the US Federal Reserve. But today's session really was completely locked in a 40-point range on the index, and the end has been right in the middle of that. We saw some weakness in certain pockets. For instance, banks weren't really providing great comfort or support to this market. Auto stocks were feeling the blues really, with the festive fervor not being as much as what the market was expected. All the companies have grown, but not in line with expectations. So auto was a weak pocket. But interestingly, there were some lone rangers. Some metal stocks really shone bright, and they made a very, very smart comeback. The likes of Hindalco, Vedanta. Towards late trade, there was actually a good pickup in some of these earlier beaten down stocks. And the likes of Lever had a good session as well. So select buying in blue chips. Overall speaking, the day belonged to mid-caps, and that trend has been on for several sessions. Now it continued today as well. A wide outperformance even in the mid-cap index, or if you look at the advanced decline ratio, we've had a very healthy run in the broader markets beyond the Nifty 50 and the Sensex 30. Well, let's tell you what we are covering over the next 30 minutes on the show today. RBI Governor Raghuram Rajan talks about today's credit policy, the 7th Pay Commission and its impact on inflation. Sanjeev Prasad of Kotak Institutional Equities says that the market will remain range-bound. Mithili Balasubramaniam of IDBI Bank talks about the bank's stake sale, and Umesh Chaudhary of Titagarh Wagons is positive about the GE Alstom locomotive contract. But first, the action itself. The RBI status quo policy did not have any impact on Dalal Street today. Anuj Singhal is here with a wrap of all that transpired. Anuj, the policy clearly not enough to make the market break out of the range?
For the market, it was another range day. But what stood out again was that mid-caps outperformed again. And that really has been the key thesis, that the Nifty is not giving any kind of joy to the traders who are trading for either a breakout or a breakdown. But individual names, if you get them right, you are making a lot of money. And today also, you saw big gains in metals and a couple of other commodity names. There was some sulking that you saw in banking names, but overall, it was still a decent day if you were a mid-cap trader. Let's talk about some of the stocks then. Metal stocks did well, as I said earlier. So stocks like Hindalco, Vedanta, some of these stocks rallied quite a bit. Tata Steel as well, up about 3.5%. Apart from that, some other nifty gainers included BPCL, that was up about 3.5%. Coal India was up 3%, and Dr. Reddy's had a bit of a relief rally. That stock was higher by about 3%. On the losing side, Bharti Airtel was the top loser. In fact, it's been the top loser for the last couple of days now. GAIL was down about 2%, and Axis Bank as well was down about 1.6%. Some other notable losers today included stocks like Maruti, Tata Motors, and Eicher Motors. In fact, it's the auto sector that was a big drag today. Some of the big ones were down quite a bit. Eicher and Maruti in particular reacting to their sales numbers, which were not bad, but were lower compared to the elevated expectations that the market had. Then finally to the mid-caps, because that really was, again, the story of the day. So stocks like Copran, Treehouse Education, Dena Bank, all up 8 to 14% with big volumes. Not just that, Jubilant Industries, Lux Industries, which finally traded on the NSE, 16% higher on that. Munjal Auto was up 20%. There were lots of names which were gaining anywhere between 10 to 20%. And the sense you get is that this kind of mid-cap outperformance should stay for some more time.
All right, Anuj, thank you so much for that. It's time for some market opinion now. Sanjeev Prasad of Kotak Institutional Equities says that there are not enough positive triggers for this market. He believes that it will remain range-bound.
I can't see too many positive figures for this market. If you look at other side, clearly you will have this Fed event, on 16th and 17th, and most people are penciling in some increase in the Fed rate. if it is followed by dovish commentary, then I think you could see some rally in EM markets. It's really a mixed bag in terms of what the market can do over the next 3-4 months. Some positive factors, some negative. So I suspect it's going to be range bound in a reasonably narrow range for some time. More positive on stuff like Maruti, Bajaj, etc., which we have been positive for some time now. Having said that, again, the volume growth will be quite decent in fiscal 17, given obviously the positive impact of the 7th Pay Commission recommendation, which is probably going to be accepted by the government. We're still okay with Tata Motors. I think the stock can probably go up to 470, 480 kind of number, and then we will review the call. As of now, we are still comfortable with the valuations.
All right, now on to the big CNBC TV 18 exclusive of the day. Lata Venkatesh caught up with Raghuram Rajan right after the policy announcement. He says that though the recommendations made by the 7th Pay Commission have had an impact on inflation dynamics, he's confident that it may trend lower than RBI's estimates in the near term.
From when we made the estimates in September to now, what has generally happened is the information that's come in has caused us to reduce our expectations of inflation, the information that has come in. Then there are risks going forward which tend to elevate our estimates, risks such as the Pay Commission, for example, and the evolution of food prices post 2 tough monsoons. So in general, I would say that if you look at our curve, it's broadly in the same place it was as in September, with a slight bias towards the downside. That's what's in the policy statement.
The incremental information gives you a sense of lower inflation for what period? Along the curve or only for January 2016? No.
So certainly for the near term, it gives us a greater sense of where we will be. But what I'm also saying is that we had in mind some of these risks that we've highlighted here. To some extent, if you think that pulses have been more persistent over the last few months than one thought, that has been offset by the realization over the last couple of months of inflation slightly below where we expected it to be. So it's in that sense that some of the information has come in lower. Plus, if you look at oil prices going forward, that also gives a certain amount of comfort that it has stayed relatively low, because we have to see what OPEC does.
But if you take your comments on services inflation, non-food, non-fuel inflation, as well as to it, impulses from GST, 7th Pay Commission, would you be? I mean, are you still reiterating 4.8% in January of 2017?
Well, it's in the ballpark of that number. I'm not sure that I would say exactly 4.8%, but
not 5.4.
No. Otherwise, would be somewhat off where we intend to be. I think of the factors you mentioned, such as the Pay Commission, some of the factors are going to be balanced by government action. Of course, the additional outlay has to be balanced by an appropriate, finding space so that the fiscal sort of deficit targets aren't breached.
All right, moving on. With the festive season being in full swing and a slew of new launches to back it up, November was expected to be a good month for the Indian auto industry, but the actual numbers are not that flattering, with most car makers missing expectations. Sonia Shenoy is standing in with the details. Sonia, not a great month for most of these companies, barring, I guess, Mahindra & Mahindra.
Well, yes, for the month of November, things have been a bit slow on the auto sector front. In fact, for all the numbers that came out, the numbers were below expectations. Let me start with Maruti. The total sales growth was 9.7% year-on-year. But if you look at the export growth, it has slowed down all the way to just 1%. And you also had a disappointment in some of their segments, like the mini car segment, which actually fell about 4.7%. For Eicher Motors, the Royal Enfield sales were strong, but below street expectations. So the sales have gone up about 48% year-on-year. October, they did have some production and dispatch issues at their Chennai plant because of the heavy rainfall that you had there. So that was some localized issue for Eicher Motors. Ashok Leyland as well, sales were well below expectations. The total sales growth was up just 16% and light commercial vehicle sales were up just about 6%. Apart from that, for Ashok Leyland, it has been seeing a moderation in growth post the pre-buying that took place till the 1st of October because of the onset of the new safety regulation. Now for M&M, that one actually looked good this time. So total sales, auto sales were up 21%, while tractor sales were quite strong, up about 42%. So all in all, the numbers were disappointing for most, slightly lower than expectations, but M&M surprised on the upside with a good performance coming in from tractors.
All right, Sonia, thank you so much for that. Bharti Airtel was one of the top losers on the index today. The stock was down almost 3%, and in fact, it's fallen almost 3% in 2 days. Brokerages have not been very happy with the company's aggressive capex plans. Just a reminder, it was only yesterday that Bharti Airtel unveiled its plans of investing 60,000 crore rupees over a 3-year period to upgrade its network infrastructure. So what's the worry? Let's ask Rima. What are these concerns, Rima?
Yes, both Credit Suisse and Kotak has lowered their target price on Bharti Airtel post its aggressive capex plan. So first, let me start with Credit Suisse. They've lowered the target price to 270 versus 285. They've cut their FY18 EPS estimates by nearly 6%. This is in reference to the company's announcement yesterday about a large 60,000 crore rupee network transformational project that they're undertaking in the next 3 years. That, Credit Suisse says, is a 40% step up in their annual capex run rate in rupee terms. And not just that, this capex will be sustaining for the next 3 years, and that is their worry. So clearly, it's a consequence of the rising competitive concerns, and the cash flow situation for operators could get worse, especially if the government decides to auction spectrums next year. Kotak too has lowered the target price to 385 versus 410, though they retain their ad rating on the stock. They say the announced capex is 25% higher than their own estimates, and it comes as a negative surprise in the absence of any outlook from the company on the likely timeline as well as the magnitude of the monetization of these investments that they're making. They're also saying keep an eye on Idea because Bharti's aggressive capex spend may force a recalibration of Idea's own plans on their capacity expansion.
All right, Rima, thank you so much for that. Time for a break. But when we come back on the other side, we'll be telling you about all the stocks that were in focus today.